Primary issue is around 353 crores and the OFS bid is around 11 million shares. Issue opens on 10th December, that is Wednesday, and closes on 12th December, that is Friday. Anchor day will be on 9th December.
And as an organization, we are a full stack dialysis organization. We have the capabilities of running a single bed in a home settings to running the largest dialysis unit in Tashkent that we established. So from 1 to 165 beds capacity, we have it all. We have dialysis on wheel, we have home hemodialysis, we do greenfield centers, we run inside hospitals, corporate chains, and government partnerships, and running the largest dialysis in the world. So we have a full stack capabilities of establishing and running dialysis clinics. Capability with quality focus. It is the cost leadership that NephroPlus has. That's why we are able to operate in such low price point markets. And cost is because of our consumable pricing, economies of scale, and contract manufacturing and having key relationships. Our cost structure is best because of our operating protocols, which have really trimmed any excess from the system. Third is our expertise around this biomedical. And fourth is the human resource that we spoke about, NPD and the various training academies that we have. So all these four cost structures we control to be extremely cost efficient, and this helps us with this efficiency go overseas as well. Second is the execution capability that I spoke about. Third is the growth DNA, that we are very comfortable with all formats of growth. We have done a joint venture in Saudi Arabia. We have done a PPP in India and in Uzbekistan. We have done center-by-center roll-ups in India. We have 270+ partnerships with captive hospital chains, and we have also done M&A. So we are very comfortable with all aspects of growth, and given that we are single service focused, which helps us scale up in every geography that we commit to. Be where we are and why we are very bullish about the future. So these are the three pillars that NephroPlus stands on: quality, accessibility, and value. As we've spoken about this a couple of times, that is a life-saving therapy. So quality is the DNA, because we are adding 3 days to a person. Like each time a person comes for dialysis, we are adding 3 days, 3 days, 3 days. So it is important to deliver very high quality each time, every time, in every corner we provide dialysis. So quality is the most important pillar that NephroPlus is built on. We have over 145 NABH networks. Synthing company as a whole is ISO certified organization, so our protocols are very well defined. We are the company which is called on the policy corridors as well for any discussion around dialysis or any policy formulation on dialysis. So we are the de facto face of the dialysis world as well in the country. Accessibility, Vikram spoke about it, that we have 77% plus of our clinics across in tier 2 and tier 3 terms. We are operating in 290 cities. So imagine India has top cities, probably 10 or 15. So rest of our centers are all in tier 2 and tier 3 cities. So we are very committed towards providing access to dialysis across. And this capability of NephroPlus has also helped us go overseas. At the same time, we not only provide quality, accessibility, we also create value in the whole process.
The first part is, we are a distant leader in India. The next competition, we are 4.4 times larger than the next competition. We want to continue to consolidate this leadership position. In our RHP document, you will see we are raising 353 crore of primary, out of which 129 crore will be spent on adding about 50 to 60 clinics every year for the next 2.5 years. So we want to consolidate a leadership position so the distance between us and the next competitor continues to increase. Our next strategy is to grow in the international market, where we have now been there for 3 to 5 years. The third part of our strategy is to take our dialysis DNA, our strength in dialysis, our right to win in dialysis, because we have the world's best cost-quality combination. We want to take this India platform. India operates at a $22 price point. When we go to Philippines, which is at $111 price point, Uzbekistan, which is at $55 price point, Saudi Arabia, which is at $240 price point. Every other country in the world is operating at higher price point than India. And when we are able to take this India platform and replicate it in other parts of the world, we believe we have the right to win. And that's our strategy. We want to open a new market. We want to expand further in Saudi, in the Middle East, in Asia, and other parts of the world. So that's the third part of our strategy. The fourth part of our strategy is to leverage our scale. We have grown at the CAGR of 31%. Our EBITDA has grown at a CAGR of 85%. Our profit margins are constantly rising. There are two metrics in particular we focus a lot. As a CFO, I give a lot of focus to these two metrics. The first one is ROCE, return on capital employed. In our business, it's very easy to deploy the capital on many suboptimal projects because there is so much demand for dialysis given the under-penetration. We as a company are very disciplined. We allocate capital only when it is ROCE accretive. In our business, it's also important that you account for the cost of capital because the AR cycle can be relatively high. So ROCE is one metric where you account for the cost of capital, the working capital, the account receivable, all of that is accounted in the ROCE. So when we evaluate a project, we are very disciplined in investing when the project makes sense from a ROCE perspective. And because of our discipline, you will see our ROCE profile has gone from 0.4% to 18.7%. And if you look at the RHP, our first half result, our ROCE is 12%, which if you annualize, it becomes 24%. So we are constantly becoming better, more disciplined, and better from a return perspective. The other metric that we are very focused on is cash flow. We have an owner's mindset. I am maniacally focused on converting our earnings into cash on a daily basis. We have daily routines to make sure that cash is coming into the business. For example, if you look at our 2023 number, 81% of our EBITDA was converted into cash. So as a company, we are very, very focused on generating cash flow.